U.S. Economic Pulse Check, Housing and Employment Data for June 18, 2025. Today we are examining the latest economic indicators that provide crucial insights into the health of America's housing market and labor conditions with data released through mid-June 2025. Housing market shows signs of cooling. The May 2025 housing data reveals a notable deceleration in new construction activity. Housing starts dropped significantly to a seasonally adjusted annual rate of 1,256,000 units, representing a sharp 9.8% decline from April's revised estimate of 1,392,000. This also marks a 4.6% decrease compared to May 2024, suggesting both monthly and annual weakness in housing construction momentum. Mixed signals in housing categories. Breaking down the housing starts data reveals an interesting divergence. Single-family housing starts showed resilience with a modest increase of 0.4% to 924,000 units, indicating continued demand for traditional family homes. However, multifamily construction, which includes apartment buildings and condominiums, registered 316,000 starts, contributing to the overall decline in housing activity. Permit activity reflects cautious outlook. Building permits, often considered a forward-looking indicator of construction activity, declined 2.0% to an annual rate of 1,393,000 in May. This represents a 1.0% decrease from May 2024 levels. Single-family permits fell 2.7% to 898,000, suggesting builders are becoming more cautious about future construction projects, possibly due to interest rate concerns or market uncertainty. Completions provide some relief. On a more positive note, housing completions surged 5.4% to 1,526,000 units, indicating that previously started projects are reaching completion. Single-family completions performed particularly well, jumping 8.1% to 1,027,000 units. However, these completions remain 2.2% below May 2024 levels, reflecting the impact of reduced construction activity in previous months. Labor market shows subtle stress signals. Turning to employment data, the labor market presents a picture of stability with underlying concerns. Initial jobless claims for the week ending June 7th held steady at 248,000, unchanged from the previous week's revised level. While this suggests immediate stability, the 4-week moving average tells a different story. Rising unemployment trends. The 4-week moving average for jobless claims rose to 240,250, marking the highest level since August 2023. This smooth measure helps filter out weekly volatility and suggests a gradual upward trend in unemployment claims, indicating potential softening in labor market conditions. Insured unemployment reaches multi-year highs. More concerning is the insured unemployment rate, which ticked up to 1.3% for the week ending May 31st, representing a 0.1% increase from the previous week. The number of people receiving unemployment benefits climbed to 1,956,000, reaching the highest level since November 2021. This 54,000 increase in insured unemployment suggests that more workers are experiencing extended periods of joblessness. Economic implications. These data points paint a picture of an economy experiencing some cooling pressures. The housing market's deceleration, in particular in new construction starts and permits, may reflect the impact of elevated interest rates and affordability concerns. Meanwhile, the gradual uptick in unemployment indicators suggests the labor market may be losing some of its previous strength. Looking ahead, the combination of reduced housing construction activity and rising unemployment claims bears monitoring. While neither indicator suggests immediate crisis, both point to economic moderation that could influence Federal Reserve policy decisions and consumer spending patterns in the coming months. For policymakers and investors, these indicators provide important context for understanding the current economic trajectory. The housing market's mixed signals and labor market's subtle weakening suggest an economy that's cooling from previous highs, though still operating within relatively healthy ranges. This data snapshot from June 18, 2025 captures an economy in transition, with both housing and employment sectors showing signs of the broader economic recalibration taking place across the United States.